What's up, y'all? Dustin Owen, aka Dio, back with another episode of Talk Mortgage to Me. Now, I'm still with my guy, Dave Hochberg. We're still in Chicago, Illinois, recording out of his radio studio, WGN Radio. Now, what you're going to see is a clip of Dave and I discussing why putting 20% down for so many home buyers doesn't make sense even when they have the money. You see, I've done this throughout my origination career, and Dave has obviously done it throughout his, because he's going to talk about it when you watch the clip. But he had a client come to him where they had 20% to put down. However, they also had auto loans that were at high interest rates. They had credit cards that were at high interest rates. They didn't have enough money set aside for a rainy day. We call that your emergency fund, or I like to call it 6 months reserve. And putting 20% down, although it would have helped them purchase the home and they would have qualified, it wasn't the best financial decision. Because as you'll see by watching this video of Dave and I yucking it up in his radio studio, there's no such thing as a one-size-fits-all mortgage. Let me stop here so you can watch the clip of Dave and I doing our thing.
So what do you want to unpack first? Do you want to unpack the 20% down myth or the credit myth?
Here's what I want to unpack first. The 15-year conversation that we just had. I just spoke with a daughter of a 65-year-old couple.
Okay.
They've got 4 years left on their mortgage at 2.99%, 15-year fixed loan. Their income earning potential has been decreased with their age, and they're sitting with $48,000 with credit card debt that's costing them over $2,500 a month, which is more than what they are paying on their mortgage. They probably still would have been in credit card debt if they went into a 30-year, but they'd be in less credit card debt if they didn't go into a 15-year fixed loan. The other thing I want to say about the 15-year fixed, you loathe them, I hate them, is because you could always turn a 30 into a 25, a 20, and a 15 into a 10 by just paying more when you have money. Being locked into a 15-year fixed payment is the dumbest move that anybody can do, because I've seen situations where I've put in borrowers into 15-year fixed loans because they basically forced me to, against my will. I'm like, that's not what I'm recommending. They're like, this is what we want. I'm like, great, okay.
And it's one of those, we are in retail, so the client's always right.
If you want a 15, you want a 20, I'll put you in the loan, but my recommendation is not. Then a couple years later, they're calling me back with $20,000, $30,000 worth of debt. Somebody got sick, somebody died, somebody got injured, somebody lost their overtime, somebody lost their job, somebody's factory got shut down or moved off to another country. They don't have a job anymore. And the other 1,500 different variables that I could talk about, their real estate taxes went up. Their insurance got canceled and they had to pay some hijacked insurance cost. Their car broke down and they didn't have $500 in their bank to replace the wheel. Not only do they have to replace the wheel, they have to replace the tire, the wheel, and the front end because it hit a pothole here in Chicago that you could lose a small baby in. Okay? They don't have anything like that. So that's why I hate 15-year fixed loans. Now that we got that covered.
So regardless if you're trying to put 0% down, which by the way, there are plenty of no and low down payment options. But regardless if you're looking to put 0% down, 5% down, 20% down, or 50% down, hopefully what you've learned from watching this episode of Talk Mortgage to Me is there's no such thing as a one-size-fits-all mortgage. Mortgages must be tailor-made to match your financial needs, wants, and goals. So before you go out looking at properties, before you go out making offers, make sure your first phone call is sitting down with a mortgage professional like Dave Hochberg or someone on his team where they can do a full assessment and they can tailor make the best financing for your situation. In fact, if you want to connect with Dave and connect with Team Hochberg, all you have to do is click the link below in the description. And by the way, make sure you subscribe to this channel so you can get caught up on every future episode that we'll be dropping.